episode of the Capital Gains Tax Solutions Podcast, also streamed on Expert CRE Secrets Podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated crypto businesses, real estate, defer millions of dollars of capital gains taxes so you can create and preserve more wealth or help your clients, friends, and family do the same. My name is Brett Swartz, and I am the host of the show for today. In each and every episode, we're joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. She's out of Illinois, in the Chicago area, and she's a managing director of XA Investments. She's a partner in the firm and is responsible for all product and business development activities. She's responsible for the firm's proprietary fund platform and consulting practice. She has developed an expertise in closed-end fund project development and is a frequent contributor to media and industry events on topics including interval funds, alternative investments, London-listed investment companies. She has earned a CFA designation, is a member of the CFA Institute, and so much more. We're going to be talking about all kinds of really cool stuff here that I have never even learned about, and I'm sure Kim's going to introduce us to. Please welcome with me, Kimberly Flynn. Kimberly, how are we doing?
Great. Thank you, Brett. I'm doing well.
Excellent. Nice to see you and meet you here, and for the first time. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. I've spent the last 20 years building investment products, primarily for individual investors. And I started my career in asset management at Nuveen Investments, which is a leader in the marketplace in a very niche product category called closed-end funds. And what's interesting about the product focus that we have is that right now, a lot of individual investors are looking to diversify away from just stocks and bonds and maybe real estate holdings that they have into different types of alternative investments. And what my focus is now in terms of product strategy, product structuring is interval funds, which is really an awesome way for individual investors to save for retirement. There's a wide variety of strategies. Some have better tax advantages than others, but a lot of features and benefits that retirees and investors should be thinking about beyond just the world of stock and bond investing.
Excellent. And we're going to be talking all about that here in a second, which is the title of today's show, which is Alternative Investing in Interval Funds. It's kind of a mouthful. But before we go there, Kim, I do want to take one other step back. I believe you'll all be given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. So maybe go back to the days before you were doing all these really cool stuff, what you're doing now. What would you say is your one or two strengths that you believe you were given, and how does it help how you help and bless people today?
Absolutely. I've been very blessed in my life in terms of the education opportunities that my parents provided me. I've always been, sort of process minded, and I like to apply that to my work. I also do a lot of volunteering, giving back in my community, various nonprofits, and also my church. But these blessings have really been things that I've been able to share with my coworkers and my family. In terms of strengths, I guess I would say I'm a writer, I'm a communicator in an area of finance. When we're talking about alternatives, these are complicated things. And I think I've been able to take the gifts that I have and break down complicated topics and make them easier for people to understand. And I try to share that gift with others in terms of the teaching and the coaching of the people on my team.
Fantastic. Those are great gifts. And with that in mind, let's dive right into what maybe might be complex, at least it sounds on the front end, but perhaps we're going to make it really simple. I think you will, which is alternative investing in interval funds. So I guess A, let's start with what is an interval fund? And then B, what's the number one secret to investing in it?
Sure. So an interval fund is a type of SEC registered investment fund. Another type of registered product would be a mutual fund or an exchange traded fund, which you're probably already very familiar with. Interval funds have been around since the 1980s, but it's really just been in the last 5 or 10 years that both alternative investment managers and some large traditional asset managers have been using these structures to make less liquid or illiquid assets available in this type of fund format, which makes it easier both in terms of investing in funds, but also in terms of monitoring your investment or just even receiving a 1099 tax form at the end of the year. So an interval fund, being a registered fund, shares some of these features of other registered funds like mutual funds. But the differences and some of the risks that investors kind of have to think about come with the fact that you're opening up your portfolio to a wider set of potential investment strategies. And that can range from real estate debt, real estate equity, to things like private equity, venture capital, infrastructure, or other types of real assets. And these are long dated assets, highly illiquid. If you're thinking about a commercial piece of real estate, or if you're thinking about a toll road or a pipeline or something of that nature, which might find its way into a infrastructure portfolio. But the benefit of these alternative or less liquid assets is that they can be put together into a diversified portfolio, and asset managers can deliver benefits to investors, potentially higher returns or higher yields than stock and bond investments.
Got it. So it sounds like it's a less liquid or completely illiquid assets that are pulled together into a fund that someone can invest in as a whole to diversify between these less liquid assets. Is that a fair summary, Kim?
That's right. And the name of the fund, interval fund, it refers to the frequency of liquidity that shareholders might have if they wanted to exit a product. And so you can invest in interval funds. Many of them you can invest on a daily basis. You can go into the interval fund, but the exit is limited because you can't have all investors wanting to pull proceeds on the same day if the underlying portfolio is less liquid or illiquid. And so the interval fund speaks to the predetermined period by which most funds on a quarterly basis will allow some portion of liquidity. And then that gives, I think, investors who are going into a new product a sense of, okay, well, this is a medium or a long-term investment, but it gives them a sense of how much liquidity they might be able to secure if they wanted to exit or reduce a position.
Okay, excellent. I was speaking with Kimberly Flynn at xainvestments.com, xainvestments.com. So Kim, what does XA Investments do in particular as it pertains to this? So we kind of define what that is, what interval funds is, but what do you guys do to help facilitate or bring this about?
Sure. So we do three things. I think the first one that's most interesting potentially to people listening is the education that we provide on the structure itself, the benefits, why you'd even consider an interval fund. We provide a lot of resources on our website and our knowledge bank. And some of those resources were developed in partnership with asset managers that we serve as a consultant. We will help asset managers who are trying to figure out how do I reach a broader audience. Many of the alternative investment firms that have historically just managed pension money or endowment money, they focus on institutional investors only. And so for them, it's an education process to be able to reach, teach, approach individual investors. And so as a consultant, we help them think through their product strategy, help them get to market, and help them educate potential investors in their fund. And so that's one of the things that we have a wide visibility across the market, and we can share that with our consulting clients.
Fantastic. Absolutely. Love that. And I feel like it's definitely a niche, right? For what you guys are doing. What would you say is the maybe the best question that I haven't asked you yet? Maybe what should I have asked you, and then maybe answer that question.
Well, I would agree with you, Brett, that it isn't a niche market today, but it's a growing market. So I think the question is why is this market for alternative investments getting larger, and why are so many asset managers trying to tap into this this market opportunity. And if you look at McKinsey research that's been done on the asset management space, they talk about growth rates in the retail market, primarily focused on individual investor wealth creation and wealth growth. That's where all the growth is going to be in the next 10 to 20 years. And so if you're a money manager and your client base is largely institutional, you think about a pension or endowment, those pools of capital are shrinking. And so naturally, you would imagine that these alternative asset managers who want to approach a different audience are going to need some assistance and help in doing so. And the real trend behind this great shift from institutional money pools to retail is the fact that, as retirees, the onus is on us. The burden of saving for retirement is mine, and the planning for my retirement is my responsibility. And so with that, a lot of individual investors have turned to financial advisors to assist them and help them with that process. But if you're an individual investor and you're not benefiting from a institutionally managed pension account, pensions have long invested in alternatives like private equity, but most individual investors have not. And so that difference in terms of the types of investments that institutional investors have long invested in, that's going to drive big return differences for retirees if they don't have access to the same types of investments. And so that's what's exciting about now. I think there's a lot of individual investors who would say, hey, I've long heard about private equity, but how do I access the best private equity managers? How can I do that in my retirement account? So that's why this is kind of coming about now.
Yeah, it makes sense. Yeah, it's a shift. And can we talk a little bit about the $84 trillion that's transferring in the next 20 years, known as the largest wealth transfer in the history of the planet? I think it's like 77 million baby boomers in the U.S. alone. 10,000 are turning 65 every day, and massive amount of wealth that's tied up in, I guess, alternative investments, real estate, private equity, or businesses, and then primary, like highly appreciated primary homes. In fact, those 50%, that amount, those three categories represent 50% of the total net worth in America, and it's going to be transferring. And by the way, I think it's where a lot of people made pretty secure wealth. If they as long as they didn't take on any bad debt, and overpaid for a property,
Right.
they've made a lot of wealth. And so just talk about that massive amount of wealth that's transferring, and I guess the importance of having these types of funds in place for those commercial real estate properties or maybe that private equity.
Well, and these funds are going to play an important role for, the generation of investors who, maybe they invested 20, 30 years ago. And so these vehicles will provide incremental liquidity, buying into an established real estate position, putting it alongside other real estate investments, managing it in a diversified way. In some ways, it's going to facilitate the transfer of the assets from one generation to another. In the not just the interval fund market does that with respect to real estate. The real estate category is the second largest category in the interval fund marketplace. But as you know, the REIT marketplace, the non-listed REIT marketplace, is massive in terms of how diversified pools of commercial real estate are managed. And so that those vehicles all allow for the exit of older investors and bringing in newer investors. And I think there's a lot of questions right now specifically with respect to commercial real estate about valuation, but these vehicles also have a role to play in terms of sorting out what the market demand is for the real estate and putting pricing on it. And so likewise, the same could be said for wealth creation from the establishment of a private business. And mergers and acquisitions in the U.S. can drive a lot of capital markets activity. And we have in the interval fund market, we have venture capital strategies who invest at very early stages of company growth, like seed round or A round. But we also have late stage type private equity buyout type investment. There's also an example of even later stage, some of these unicorn companies that have stayed private longer. There's a gray share that exists for employee shares in those unicorn companies. There's actually an interval fund that provides liquidity for those employees. And so once again, a lot of wealth creation happening in the private markets, and some of these vehicles are providing new points of entry, but they're also providing liquidity for people who maybe want to reduce their position.
Yeah, very well said. We're talking with Kimberly Flynn, xainvestments.com. It's xainvestments.com. We're talking about alternative investing in interval funds, and also just real estate and the transfer and the change. The transfer between different asset classes and the access to diversification. What we found, Kimberly, one of the biggest barriers to that, or the brick wall that some people really run into, is that capital gains tax. And it's looking at selling that highly appreciated asset to be in a diversified fund, but they go, if I sell, I'm gonna get crushed with 25, 35, 45, maybe 50% of my proceeds are gonna be crushed by that capital gains tax depreciation recapture. So I'm curious, what would you say you see as the biggest frustration as it pertains to a 1031 exchange and or just capital gains in between the transfer of public stock, cryptocurrency, businesses, real estate to try to access these other opportunities like the interval fund?
Yeah, I think what you're addressing is why we've seen so much a conversation around opportunity zones and 1031 exchanges. It's really an important aspect of planning that a lot of the financial advisors who are users of interval funds, they're also helping their clients already with some of the 1031 programs, and that I think is going to only continue. There's a lot of questions around, how do we drive returns and achieve higher yields in some of these investments, but not give it all back in terms of higher tax. And I think that particularly in the credit space, the surprisingly a little bit, the largest category of the interval fund market is private credit, and specifically direct lending has been one area of focus. As banks have stopped providing loans to small businesses and to medium-sized businesses in the U.S., these private credit firms have stepped in to address that gap. And the reason I mention it is because a lot of the private credit strategies are generating, ordinary income. And so clearly there's a desire for high current yields driving the demand for these products. It's not necessarily, if the client is not saving in private credit in a qualified account, there's going to be a tax bill due. And so we always think about the mix of investment solutions that financial advisors, have available to offer. And I think, there's no real substitute for some of these really attractive real estate products that we've talked about in the marketplace. And I would say that the interval funds are really going to be a complement for part of the portfolio, but they're not going to serve as a good substitute for some of those real estate products that you mentioned.
Yeah, no, very well said. And to that point, we found that it's beyond just the cash flow discussion, right? You got to have the tax flow discussion. So I like the way you put it. How do we drive returns and achieve higher yields without having just to give it all back in taxes, right? So
Right.
you've got to have a full plan in place. We have a strategy. I think it's pretty unique in that I feel like it can really exemplify the returns, or at least give you an opportunity to make those higher returns. But it's like a qualified plan in that it receives the capital at the close of escrow. And like, let's say a $10 million exit, you defer like 40% of tax, but the actual investment compounds, and it doesn't typically ever pay tax unless and if the recipient or the note holder in this scenario takes back payments. And so it can defer capital gains tax. It can also defer income tax until they receive payments from this trust. And so it's kind of like a qualified plan, like an IRA or 401k in that scenario, except there's no minimum required distribution. It works for any asset of any kind on the sale of it. And they can also eliminate estate tax. So touch on just the importance of, you know, having tax flow planning, right? Having advisors in the place to be able to say, look, it's not just cash flow and appreciation, it's tax flow and deferral or elimination of estate tax.
It absolutely is. You've got to be thinking about, taxable equivalent yields. For example, if you're investing in municipal credits, it's not been a great year, the last year for municipal bonds, because that's what people naturally think of, as outside of a qualified account. And I think that to put products that you're using on a side by side comparison basis, you do have to adjust for that. For, if I've got a private credit fund earning ordinary income side by side with a real estate product that has those kind of tax deferrals that you mentioned, next to a muni product, next to an infrastructure product. So it is helpful to think about what is the client's goal. It's not just absolute levels of total return. Some clients might be more biased towards current cash flow. And so for them, it may be worth some of the tax trade-offs that we've already talked about, because you're going to be hit with an ordinary tax bill. And so I do think that each client's a little bit different. While I've said that interval funds are primarily for alternatives like private equity or real estate, there's actually a growing number of what we would call like high yield muni, and sort of more aggressively managed muni strategies. So I think it just highlights what you're talking about, in terms of what do people want? They want to the extent they can, avoid paying incremental tax. And so that's why some of these options are ones that are, I think, perennially going to be in demand if you're able to defer or even avoid tax.
Absolutely. And by the way, if you want to learn more about our unique strategy that we have here, you can go to capitalgainstaxers.com. It works for any asset of any kind. You just have $1 million net proceeds, $1 million gain. It can also save a failing 1031 exchange. In fact, we have a brand new product we just released this year called the Best 1031 Exit Plan, where you have a 1031 exchange, but you have a backup plan in case it fails. So you're not stuck in what's called 1031 jail and or overpaying for a property that you don't want to buy. Make sure to go to experttaxsecrets.com or capitalgainstaxers.com to start your plan today. That being said, Kim, are you ready for the lightning round?
I'm ready.
All right. Knowing what you know now, if you could go back to your younger self, what was the one golden nugget you make sure to tell yourself to do?
Don't quit the violin.
I like that. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
See, there's a new book by the author of SPQR about Roman emperors. And my family took a pilgrimage to Rome. So I would recommend SPQR or any of the other books on Roman emperors. It's just fascinating to take leadership lessons from that long ago.
Absolutely. Check that out. Question number 3, what are you most curious about right now?
I'm always curious about how to be a better coach and mentor, and involved in a process of ongoing learning in that department. I've got a team of 7 people, and I work with a lot of young people in their 20s, and there's a lot of generational differences that, I suppose are set us apart in terms of how we need to manage and motivate people, and that's what I'm focused on.
Excellent. What's the number one way that you and or your team use Chat GPT?
Right now, we're interested in what people are learning that may not be, that we have to kind of dispel certain myths. So we'll check Chat GPT for some of the topics that we write about. And we want, because some of the stuff we do is niche or complicated. And so we want to make sure that we can help dispel some of the myths that are out there. So it's more of a quality double check, but it also informs how we educate people.
Excellent. I like that. Yeah, it's like a second set of eyes or ears just to see kind of what's out there, and it's checking it out. So cool. What's your number one leadership quote or theme that you strive to live by?
Oh, I've got it on my wall. So it's done is better than perfect. So done is better than perfect. They hang it on the walls of Facebook, but I love that because I think a lot of people spend a lot of time on that last 10%, last 10% when it's probably good to go. Not to say that we don't focus on quality, but I think that having a sense of when it's done, when something's ready to go, and not obsessing on the last 10%.
Very well said. Great wisdom. Last question, Kim. After all your success, helping all the people you've helped build all of the unique funds and different ways of investing, what is the number one practice that you practice to stay centered in your values and stay encouraged to charge forward to even higher heights?
Sure. So we try to remain very action oriented. As a small entrepreneurial business, we have to be more efficient than the next firm. And so to be action oriented means to be process oriented. And let's spend our time figuring out the next problem, not just redoing what's already been done. And so having that action orientation really drives us. And I think focusing on the next step can get you there. It's a time of New Year's resolutions, and I think that'll help some people. It's put one foot in front of the other in terms of trying to get to the end goal.
Excellent. Love that. Kim, I want to thank you for being on the show, sharing your wisdom with us, and diving in and geeking out about some stuff that we always like to geek out about, like ways to create and preserve wealth and niche areas and tax flow and cash flow and all that you're doing. I want to encourage you to keep using the gifts and talents you've been given, especially being process-minded and a great communicator, which you absolutely were today with communicating and helping people take action on these things. For our listeners who want to get in touch with you, what's the best place for them to find you?
Sure. I can be reached at Flynn at XA Investments, or go to our website at xainvestments.com, and we will be in touch.
Awesome. Thanks, Kim. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast, also streamed on the Expert CRE Secrets podcast and YouTube channels. So appreciate everyone out there. We believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and/or a clear process in place to exit in case your 1031 fails. And using the deferred sales trust is an amazing way for you to exit and get freedom, flexibility, and get time on your side. But it starts with the plan, starts with the process, and we would encourage you to take action right now by going to capitalgainstaxsolutions.com, and/or check out the best 1031 exit plan right now by going to experttaxsecrets.com. It's a short course, as well as the actual 1031 service combined with the deferred sales trust for a backup plan in case it fails. Sometimes we're doing a partial 1031, a partial DST, but you want to have a plan and a process in place to execute so you're not caught paying more tax than you want to right away. Go to experttaxsecrets.com or capitalgainstaxsecrets.com. That being said, thank you everyone for watching or